Hello and welcome to Core Finance in conjunction with ActivTrades. And from ActivTrades, I'm joined today by Ricardo Evangelista, who is the Senior Executive Officer there. Good morning to you, Ricardo.
Good morning, Matt.
Well, thank you very much for coming onto the show again. Now, we're going to talk this morning about the dollar. We're going to look at the FX markets. And actually, it feels almost like the summer in the major currency pairs. There actually hasn't been that much volatility in the market, so it's actually been fairly quiet. Is it a case of everyone's really just waiting on what's going to happen with the dollar, what's going to happen with the Fed at the moment?
Yes, I would agree with what you just said, Matt. The atmosphere is somehow subdued at the moment. Everybody is waiting to see what will be the next steps from the Fed regarding whether or not they will be raising the interest rates for a third time this year. I think the expectation at the moment is round about the 90% mark for defending the case that they will indeed raise the interest rates again. But also there's other factors which are determining this more expectant attitude from the part of the investors. So we could, for example, touch on an important topic that is lurking there in the background, which is the choice for the next chairman of the Fed. So up until a couple of weeks ago, Mr. Powell, the chairman of the San Francisco Fed, was considered to be the favorite, the front runner for that. He was seen somehow as a more dovish figure, so not so encouraging for the dollar in terms of interest on the part of the investors. And that at the time was actually mentioned as one of the reasons for a small dip that we saw in the dollar. However, more recently, Mr. John Taylor, I think his name is,
yes,
who's a Stanford economist, is being tipped as the favorite of President Trump, and he's seen as quite an hawkish figure who's in the past defended the importance of high interest rates and the benefits that they can bring into the economy. So that would encourage investors to back the dollar. However, that is still in the balance. President Trump has mentioned recently that in the next few days, it could be a few weeks, he will be announcing his choice. So I think the investors are sitting on the fence at the moment to see also what is going to come out, what they call the beige book.
Yes.
Which will come out today at a certain point, I think, and that will also give some good background and let's say some sort of interpretation to the figures we've been seeing about inflation and the state of the economy at large, which will also have a determining will be a determining factor when it comes for them to decide whether or not to raise the interest rates for a third time.
Understood. And it feels at the moment that the dollar is dictating, when we look at the currency pairs, I mean, for example, dollar yen, and we're also looking at the euro dollar, it feels the market's in a bit of a holding pattern at the moment, and the dollar is dictating where that goes. And because people are waiting on the Fed, those currency pairs really aren't moving as much. They feel as if they're stuck in a little bit of a range. Are you seeing with investors, are they waiting for the next move, or are they building positions, or what's the general feel in the market?
So you mentioned the yen, for example. We're going to have an election in Japan. So that would, on a superficial analysis, make the case for some interest and for some higher volatility than what we've seen. However, the result of that election, it's so predictable according to most analysts. Apparently, Prime Minister Shinzo Abe, current Prime Minister, is tipped to be the winner of that election with a majority of 2/3. So that's already been priced into the currency. So there's not much to trigger excitement on the part of the investors. at the moment. On the side of the euro as well, we've had the political instability caused by the situation in Catalonia.
Yes.
That's calmed down quite a lot now. It looks like it will slowly fizzle out with the loss of political capital by the Catalonian activists, lack of international support as well. So they found themselves in a situation where perhaps they will have to rethink their approach. It looks like they are already doing that. So that made things stable on the side of the euro. We had the recent election in Austria with a right-wing party winning, and also looking like they will join forces with the far right. However, the tone of the communication coming from there is very mild, very bland. So they say, no, don't worry, everything is okay. So there's not much. I mean, as you said, there's a lot of expectation, but everything that is coming up seems to already be priced into the value of the currencies. Perhaps with the exception of the Australian dollar, who had quite a lot of movement yesterday. Positive figures came out regarding the employment there.
Yes, good figures.
Yes, exactly, better than the expectation. So that gave a little bit of a boost to the Australian dollar. Also, the publication of China's GDP figures. So obviously, Australia being an exporting economy and China being their most important customer, that also has an impact in the interest of the investors for the Australian currency. Their next door neighbours maybe not doing so well due to the uncertainty, the political uncertainty. So there's they're having some difficulties in forming government. So the two Antipodean currencies are sort of going in opposite directions. But that's pretty much it.
Yeah, and it feels at the moment the currency traders are looking at the likes of New Zealand, Australia, Canada, the Swissy, maybe even the Turkish lira, are looking beyond the major currency pairs for volatility and trading opportunities. It does feel that the major currency pairs at the moment are stuck, as we've said, stuck in kind of ranges until they have a breakout. So for traders, they're looking at other currency pairs for opportunities.
Yes, and even different categories of investment instruments. I mean, we're seeing what's going on with equities.
Yes.
Hitting records everywhere, and maybe some of the investors' interest has been diverted from currencies and foreign exchange to other types of assets, which are performing really well at the moment. We see that with gold as well.
Yeah.
Gold has been. A colleague of mine the other day said, "Gold is cold."
Yes, and always will be.
It's not. So, with the interest, with the rise of the interest rates in the US, the expectation for the same to happen in the UK, the tapering of the QE policies in Europe, that is likely to have an impact on gold because it becomes expensive for investors to hold positions.
Yes.
In gold when it's a non-yielding instrument, and when interest rates start rising elsewhere, gold always suffers. We saw the golden age of gold, no pun intended, was at the worst times for the economy, really, around 2008, 2009, and since then it's been slowly depreciating in value. So yes, these are quiet times. For investors, that's regarding forex and perhaps metals, but very, very busy times in other categories of assets. So equity is doing really well.
Fantastic. Well, lots going on and lots to look forward to. Probably see a bit more volatility in the coming months, no doubt. But in the meantime, Ricardo, thank you so much for joining us today.
My pleasure, Matt. Thank you.